Good morning and welcome to this special edition on Mirabaud TV, live on YouTube regarding the US election. It's 8:30 or 8:31, November 4th. My name is John Plassard and I'm very happy to be here with our chief economist, Gero Jung.
Good morning.
Good morning. So today, beside of the pandemic, the world pandemic of coronavirus, we are focusing on the US election between the Democrat Joe Biden, 78 years old, and the Republican Donald Trump, of course, 74 years old. So actually, we don't know who will be the next president, but we have some facts. For example, the fact that Donald Trump has actually 213 electoral votes, Biden has 238. As a reminder, you need 270 votes to be elected. For the Senate, it's even more close because you have 45 Democrats and 44 Republicans, and you need 51 seats to get the Senate. Regarding the House of Representatives, NBC News is projected that Democrats will maintain their control of the House of Representatives. And when, and this is the big question, when will we get the results? They will not be released today, what we expect, because there is still Wisconsin, Michigan, Pennsylvania, and Georgia, where we will not know exactly the number of votes tonight, even not Friday. And what we have to know is 62 electoral votes in total are being held by these swing states. And 62 electoral votes on 270 is huge. Maybe you can explain us the four scenarios, Gero, regarding the upcoming election.
Yes, thank you, John. So we really identified 4 different scenarios for the electoral outcome in the US. This is showing on the slide, and it's actually more relevant than ever because, as you mentioned, we do not have a result yet in regarding the presidential election and also the Senate race. So among the 4 scenarios, of course, the presidency will go either to a Democrat, Mr. Biden, or to a Republican, Mr. Trump, and it also depends, according to the polls and the election outcome, who will win the Senate, who will have the House majority. As you mentioned, there's clear uncertainty regarding that, but the 4 main scenarios remain relevant, and the main difference is really twofold among these 2 candidates, among these 2 presidential candidates, which is clearly fiscal policy. Under a Biden presidency and a majority in the Senate and also in the House by the Democrats, we would have much more expansive fiscal policy. The government would spend much more, the Treasury would spend much more, namely on green technology, on infrastructure developments, than a Republican presidency. So the first point and first main difference is clearly fiscal policy. There would be changes under a Democratic sweep, which is not coming, as we know right now. Certainly fiscal expansion will continue also under a Trump presidency, but will be much more moderate compared to a Democratic sweep and compared to a Biden presidency. And the second main difference is clearly also related to fiscal policy, but is changes in corporate taxes. So under a Trump presidency, we can expect that corporate tax rates will remain stable at about 21%. Under a Biden presidency, we can expect corporate tax rates to go up.
Do you think that Donald Trump could even lower the taxes again?
This is certainly possible because one of his main 3 pillars of economic policy is lowering taxes, not only for households, but also for corporates. And this is certainly a possibility. However, we do not have concrete details on that. That is really forthcoming in the near future.
Okay. So now, regarding what we can expect for the market, actually, what we see on the market is that the dollar is betting on Donald Trump. As it was started that if Donald Trump was elected, it will give the dollar a boost on regarding the dollar against the main other component like the euro. And then we saw this night that the dollar was even stronger. The treasuries are also betting on Donald Trump as the 10-year treasury yield went down from 0.92% to 0.80%. I remind you that in 2016, the opposite was a fact because the 10-year treasury yield jumped more than 50 basis points. So that could be the opposite happening now. And as we see now, if we look at the futures on the market, we see that the US futures and especially the Nasdaq is going higher, and it was even halted. The future on the Nasdaq were even halted on the market. So, Gero, why is there such a reaction, for example, on the Nasdaq and on technology stocks?
2 points to mention here. First of all, there's uncertainty regarding the election outcome, and financial markets do not like uncertainty. I think that's the first point. The second point, and you mentioned that, is a repricing, because clearly, as of yesterday, for instance, financial markets were anticipating a Biden victory, were anticipating with a probability of higher than 50% a Democratic sweep, which is not coming. So there is some repricing going on in the short term. That is very clear. Now, regarding our asset allocation positioning in the TAA, we have an overall a quite prudent view on US assets. Namely, we have an slight underweight on US equities. We are neutral on US government bonds. We like, however, we have a positive bias on investment grade bonds in the US, and we have a prudent stance on the US dollar.
Okay. As a reminder, if you're joining us, we are live on YouTube, Mirabaud TV. I'm John Plassard, and I'm with the chief economist, Gero Jung from Mirabaud. And actually, we still don't know who's going to be the next president. One other point that we can mention here, Gero, is that the emergent markets are do not like the fact that Donald Trump could be the next president. We can see that the Chinese indices are lower now. Okay, what is it? Why do you think that it could go wrong?
Clearly, one of the three main pillars of the Trump economic plan is some, let's say, more confrontational trade policy. And this basically means a trade war with China. Now, a second presidency under President Trump would clearly heighten the risk that trade tensions, in particular between the US and also China, would increase further. And this is clearly not something that is very welcome by the Asian authorities. However, what we do have in our current tactical asset allocation, we have a quite positive, and we continue to have a positive view on Asian equities. We do think that, for instance, if we look at the economic numbers, China is clearly doing better. China is following a FIFO principle, first in, first out of this pandemic crisis. And the current indicators point, especially also for September, for instance, that the Chinese recovery is continue. So for the time being, we remain with a positive stance on Asian equities, in particular those related to China, because we do see that the recovery in China, the economic recovery in China, is ongoing and continuing.
Okay, thank you. And there is a fun fact that we can also see here on the market is that the bookies has revert their bet yesterday night. Actually, the bookies are betting 77% on a Trump win against Biden. It was completely the opposite, and some newspaper were calling 90% chance for Joe Biden to win yesterday. So we see that things can change very quickly. That's why we're very prudent on the market.
Yeah, that's also what comes out from our slide. For instance, the probability priced in by financial markets, but also published by the bookies of a Democratic sweep was something like 75%, as we show in our graph. I think the main conclusion is that surveys are clearly wrong. I remember 4 years ago that people in the Clinton campaign started opening champagne bottles the night before the election results, of course, they were very much disappointed. So for the time being, I think one main takeaway is that especially national polls, national surveys are inaccurate, to say the least, and the election results, especially regarding the presidency, will be a very tight one, will be a very narrow one.
Okay, let's suppose that Donald Trump is the next president. What will be, in your view, the impact on the European market and maybe also on the Swiss market? Will there be a huge impact, or will it be the same as before?
I think two things. First of all, the US economy is a relatively closed one. If you look at GDP numbers, exports represent about 15% of GDP. In Switzerland, we are close to 50%. So the US economy is a relatively closed one, and that's important to keep in mind. The second point is the Eurozone recovery, for the time being, what we've seen in the third quarter is really driven by higher demand from Asia, from China. So the Chinese companies are refilling their stocks, are bringing up their inventories again, and this is helping European but also Swiss companies which export to that region. And we've also seen that these trade policy negotiations or conflicts coming from the US were focusing on China in the Trump presidency, not so much on Europe. So the impact on Europe, the medium impact at least, is rather neutral, we think. I think in Europe we have the bigger issue is clearly the pandemic, the second wave of the COVID-19 crisis and the impact on the services industry.
Okay, thank you. Just to remind you, we're still live on YouTube. My name is John Plassard. I'm with the chief economist of Mirabaud, Gero Jung. Just one thing to repeat that is very important is that we might not have the next presidential name in the coming hours, even in the coming days. So that might be an uncertainty for the market and maybe lots of volatility, much more than we were expecting. And even people as Donald Trump could ask for recount if he was declared, if Joe Biden was declared president. Do you remember, Gero, what happened in 2000 when Al Gore was facing George Bush and the recount took more than 1 month? Do you remember what happened with the markets there?
There was very high uncertainty, of course, 20 years ago, and it was really focusing on recounting ballots in Florida. Now we are for sure, at least at the current stage, that recounting in Florida is unlikely to happen. If we have some recounting, it will happen in the key states, Michigan, Wisconsin, and Pennsylvania, and especially Pennsylvania, I guess, is here on focus because this state only starts counting mail-in ballots today. So there might be some legal issues as well. As a reminder, the Electoral College only nominates the president about 1 month after the election. So legally, the 538 electors will vote only in mid-December, the 46th president of the US. But clearly legal risks are there, and this will heighten uncertainty. And clearly financial markets, as we know, do not like uncertainty.
Mm-hmm. Okay, one important point too is the swing state. The swing states. Those are the states you have to count on if you want to become the next president. So actually, as we saw, there is still, as I said before, Wisconsin, where we don't know the results, Michigan, Pennsylvania, and Georgia. And those account for 62 electoral votes, and this is huge if you compare to the 270 you need to become the next president. Why do you think the fact that Donald Trump has won Florida is a very important point?
It's an important point because the fact if you can say, it's the opposite. If the opposite had happened, for instance, if Trump had lost Florida, he would have to win all the other states that you mentioned, namely Michigan, Wisconsin, and Pennsylvania. Now, the fact that the President Trump has won Florida is not a must win for the other states. So therefore, this increases somewhat his chances to win the presidency, given the fact that he has won Florida.
Okay, in our view, in the view of the European, it seems that Trump's legacy is bad or wrong. Can we only say that Trump did bad thing economically and even in terms of social behavior in the US? Or is it more mixed between what he said, what he did, and what he couldn't do?
So let's first take the naked numbers, naked facts. So if we take the brutest calculation or statistics of economic growth, which is GDP, we do see that the US actually performed in international terms relatively better than other countries. So for instance, the US real GDP growth rate was at about 2.5%, and this is higher than the OECD average, which is the club of rich countries. What is also true is the fact that the US growth rate, real GDP growth rate, actually accelerated modestly, but accelerated compared to the Obama presidency. So in that respect, the US economy did relatively well. Now, it is also true that, and I remember 4.5 years ago that President Trump or candidate Trump promised GDP growth of more than 4%. This has not been achieved very clearly, but overall, to sum up, in international comparison at least, the US economy did better than others. Now, if we talk more about deregulation, there are certainly some benefits. It can be estimated that deregulation, for instance, instituted by Trump, saved the economy about $52 billion. This is 0.2% of GDP. It's very little. What is also true is that this boom in investment actually did not take place. So if we take, for example, business investment relative to GDP, it actually declined under the Trump presidency. So this boom in manufacturing, this boom in investment in companies did not take place. Now, a last point is fiscal policy. Even before the pandemic, the US fiscal deficit reached very high levels, and the US fiscal authorities are clearly the most active in spending much more in order to fight this pandemic than other countries. And this will lead to even more deficits and even higher debt levels. And this certainly will not go away. But this is also something to have in mind very clearly for the future. But overall, in a nutshell, the Trump presidency, if you look at the headline numbers, the US economy was certainly better prepared going into the current crisis than others.
And regarding the foreign policy, is it worse or better than Barack Obama?
I mean, this is more judgmental. I mean, as an economist, I think it's very difficult to gauge, to put extreme or precise numbers on how trade war with China impacted the US or not. I mean, we can see, for example, that steel, the increasing tariffs on steel, which was done earlier in the Trump presidency, did not really have big effects because now, for instance, we are in a crisis and world steel prices are actually falling. So, for instance, this kind of confrontational trade policy, increasing tariffs, did not really lead to a boom, for instance, in the steel industry in the US.
Okay, so actually, as we don't know the name of the next president, what will be the worst for the market? A recount or even Trump being president with the Senate that becomes Democrat? What could be the worst for the market in the let's say in the medium term?
Clearly, in the short term, markets will adjust because this anticipation of a clean democratic victory is not taking place. The worst thing is, first of all, recounting the ballots and then some possible discussions on whether these are legal or not. So the legal battle might continue maybe even further than the 1 month that we had 20 years ago. And this would negatively impact because clearly it would increase uncertainty.
So regarding your portfolio, as an investor, you will not change your core portfolio now. You will wait.
For the time being, we keep this more prudent stance, yes.
Okay. Alors, so just as a reminder, the market are telling us that Donald Trump might be the next president. As I said before, the dollar is stronger, the treasury yields are lower, going down more than 10%. The Chinese market is also down, and we can see that the bookies actually are betting on Donald Trump 77%, and of course Joe Biden 23%. What would be your conclusion, Gero?
We have to wait. I remember extreme volatility 4 years ago when it was a big surprise that Trump won the presidency. So for the time being, I mean, we are long-term investors and we want to keep this more prudent stance for the time being, given the fact that we're likely to see more uncertainty, certainly in the short term.
And historically, a fun fact is that the best scenario for the markets since 100 years is to have a Republican president with a Democratic Senate. And so that might be maybe the case in the coming days or hours.
It's certainly still a possibility, yeah.
Thank you very much, Gero.
Thank you, John.